Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. A lot of people still don't fully grasp what Bitcoin is. We know what's going on in our little bubble. We talk to people who fully understand it. As you said, Bitcoin is thought to be risky. We've already talked about how the business is like a roulette wheel. A lot of people feel like they're falling behind, so they gamble and take a lot of risks to try to catch up or get ahead. That's how Bitcoin is seen. In many ways and eyes, the joke coins are the ones that really take off. This is because people are willing to risk their money because they're thinking, come on, I hope I can catch up to this inflation. After the COVID lockdowns, everyone can tell that things have changed and are changing quickly. They can tell that something isn't the same as it used to be, and prices have gone through the roof and homes have become so valuable that they won't move. Interest rates are going up, and the Federal Reserve is trying to fight inflation, but it's not really working. The inflation rate is going down, but prices are still going up, and a lot of people don't understand what's going on. James Lavish starts by clearing up a widespread misunderstanding. A lot of people don't really know what Bitcoin is. People in the Bitcoin group understand how it works, but most people still see it as a risky investment. Lavish uses the huge amount of investable assets in the world, about $700 trillion, to show how Bitcoin could be used. At the moment, Bitcoin's market value is less than 1% of this amount. The fact that this tiny percentage exists shows how much Bitcoin can grow as it is known and used by more people. Lavish agrees that Bitcoin is seen as a risky asset right now. He says that this view comes from the general state of the economy, which he calls a gambler's economy. A lot of people are taking big chances to try to get ahead financially or catch up with inflation. This risky behavior includes cryptocurrencies like Bitcoin and meme coins. However, Lavish says that as people learn more about them, especially with the launch of the Bitcoin ETF and growing interest from institutions, Bitcoin will change from being seen as a risky asset to a risk-off asset that is a safer haven during times of economic uncertainty. Do yourself a favor and like this video. Also, please subscribe to the Bitcoin Bubble channel and turn on post alerts to see more videos like this. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks and have fun with the movie. A lot of people still don't fully grasp what Bitcoin is. We know what's going on in our little bubble. We talk to people who fully understand it. You see, there are a lot of different ways to figure out how many things there are in the world. Just for fun, let's say that there are $700 trillion worth of assets that can be invested in right now. At this point, Bitcoin is only a small part of that. 171st. Right on. In other words, it's not even 1% of that. Why does that matter? As you said, it's important because Bitcoin is seen as a risky product right now. We've already talked about how the business is like a roulette wheel. A lot of people feel like they're falling behind, so they gamble and take a lot of risks to try to catch up or get ahead. In many ways, Bitcoin and the joke coins are seen that way. And the joke coins do well because people are willing to risk their money. They say things like, come on, I hope I can catch up to this inflation now that we have ETFs and companies are starting to invest in Bitcoin. People are learning more about it and understanding it better. They're dipping their toes in and getting the hang of it. Institutions will really understand Bitcoin and how it differs from all the other digital currencies when they do. They'll understand why it's digital gold 2.0 or 3.0 and how it can be a real store value. Because it can't be changed, it can be transferred, and it's easy to do business with. To move it, you can move $1 trillion worth of Bitcoin in about 10 minutes. That said, once they really understand what makes Bitcoin unique, they'll start to do more than just distribute it. It will be part of their investments as a risk asset, but it will also be part of their investments as a risk-off asset. Saying things like, why am I investing in this long-term treasury bond fund or vehicle when I should be protecting my capital with this thing called Bitcoin that will rise in price? They'll start taking money out of both stock and bond portfolios. The value of a dollar drops in a very fast way. I could hope for a real rate of return, which is your bar rate again, that beats that rate of inflation or that growth in the money supply, but why wouldn't I make that investment instead? Thus, the question is, what is that rate? Growth of the money supply. If you could make the case that that's really what it is, then the price of Bitcoin will rise to match both the growth of the money supply and the number of people who use it to protect that money supply. This means that you and I will have a lot more cash on hand. Linked to Bitcoin, invested in Bitcoin, covered by Bitcoin. There are people with much more money than you and me who haven't even thought about saving it in Bitcoin. There isn't a straight link between the amount of money coming in and how the price of Bitcoin changes. It also has to do with the cash flow. This makes it hard to get in and out of the stock right now. It will reach a point where there is no more contact. In turn, this means that its price and value will rise even more, reaching what I think is the value of gold. And that's what you're getting, then a lot of those. 12 and 13 trillion. Yes, that's 12 or 13 more per year. Or even more now. Yes, I do talk a lot about this. Everyone can tell that things have changed and are changing quickly, especially since the COVID lockdowns. They feel like something isn't the same as it used to be. And you've seen the prices of homes rise and then become very hard to sell because they're too expensive. It doesn't seem to be working for the Fed to fight inflation. Most people don't understand why prices are still going up even though the inflation rate is going down. And what it all comes down to, and what you and I talk about a lot, is manipulating money. We had to change the value of money because developed central banks, like the ones we're talking about, have borrowed so much money that they have to change their interest rates and currencies to keep up with the payments. Lavish says that personal debt and state debt are alike. It's important to note that while borrowing can be used to boost short-term output, too much borrowing at the national level only makes inefficiencies worse and causes long-term financial problems. The U.S. government, in particular, has big deficits because it borrows about $2 trillion a year and spends a lot of that just paying off old debt. This case shows how important it is to find new ways to handle money, like Bitcoin. You said right before the show that debt is like stealing from the future. And I feel the same way. I think of it more as borrowing money from the future, which you can do right. For example, if you're a person who wants to start a business, you're kind of stuck in your job though. There isn't enough money for you. You might want to open a restaurant. It will cost you $100,000 to start the business, but you only have $10,000 in the bank. You think, well, I can keep working hard and saving money, or I can use that $10,000 as collateral for a loan. You then decide to borrow the money from a bank and start the business right away. Start getting me the things I need, like dishes, ovens, and other things. Also hire people and start paying them. Then you open the restaurant, and right away you start making money. You're making things get done. That is, in fact, stealing from the future. And if you do it right, like restaurants do, maybe not the best. I use restaurants as an example because it's easy for people to picture. No way, don't go to the place. Do not go to the place. But it's great if you do it in a smart way. You've started a business, you're making things, and you're adding to the GDP, right? But now we're in a situation where, the whole country, all of the Western countries, the wealthy countries, are using debt over and over again to hide inefficiencies, whether they're energy inefficiencies or capital inefficiencies. And they're borrowing money to fill the gap. To give you an example, the US government borrows about $2 trillion a year right now. In other words, they have more debt than they need to borrow to pay it off. The United States has a $2 T debt, even though it's not even a recession. So the lack of duty coming from Washington is huge. It's mind-boggling for people like you and me who have been in business and run companies. When you look at that, it's not only irresponsible, it's also throwing us down a path that we can't get back from. So then why is that? That's because we have these deficits while we're not even officially in a war. Well, maybe we are,